Okay, we're back. This is Josh Jelinski, the financial quarterback, with one of my all-time favorite guests, MorganCreekCap.com. Mark, are you promoting anything now so that we can plug whatever you're promoting?
Not really. I mean, we're always selling, right? All of us are always selling. But, I spend most of my day now, Josh, around the blockchain ecosystem. We are launching our third venture capital fund. We've raised two funds, one in 2018, one in 2020, and we're raising our third venture capital fund. And then we do have a what's called a risk managed Bitcoin fund that kind of takes some of the volatility out. We have a digital asset index fund. We do some stuff in hedge funds and venture capital as well. But, all of that stuff, because of the SEC, is for accredited investors and qualified purchasers. The only thing we do that the average investor can participate is we do have a SPAC ETF, SPXZ, that is essentially trying to acquire what we call the companies of the future. And, those companies have been taking it on the chin here. But I say investing is the only thing I know when things go on sale, people run out of the store instead of buying what's on sale. So that's a long laundry list of what we're up to. And I can hang out for about another 10 minutes.
Yeah. We'll keep you for 10 and then we'll let you go. Basically, and folks, we're not recommending you buy or sell anything over the airwaves, but it's fun to envision the future. So you were right on Bitcoin. What else do you like? You mentioned SPACs, although they have certain risks. What else do you like right now? What do you believe are opportunities?
Yeah, look, I think the big thing now is that everyone needs to own some digital assets. I like Bitcoin, I like Ethereum, but you don't put all of your money there, right? You put 1%, 2%, 3% in those assets. And the great thing is they are asymmetric, meaning that the upside is bigger than the downside. And you don't buy it all at once. You dollar cost average in over time. I was on TV a couple of years ago and Bitcoin was $3,200 and Melissa Lee said, what do you think? I said, we should buy it. But it just went down from 6,000. I'm like, yeah, so you should buy some. And then you should buy some next week and the week after and the month after. And so here we are at, 34, 35,000 and it's up 10 times. But, I missed it. No, it's just getting warmed up. But you shouldn't buy it all today. You should buy some today and some next week and the week after and the week after. And just accumulate a position, kind of, let's say 1%, 3%, 5%. The younger you are, maybe the bigger that position, because the greater your time horizon. People say, but the volatility. Volatility is our friend over the long term, right? We should seek volatile assets, which are uncorrelated with one another, and we should build a diversified portfolio. That's why people have, advisors like you, Josh, to help them do that, because buying volatile things is hard. But if you buy enough volatile assets, which are uncorrelated, you get a lower risk portfolio. Harry Markowitz won the Nobel Prize for this. And, it's like if you left all your money in cash, it's the worst possible thing you could do because you get chewed up by inflation. And with inflation rising, it happens even faster. If you put all your money in bonds, even worse. If interest rates rise, you could actually lose money like happened in the first quarter. But you can do something called SPAC arbitrage, where you buy the SPAC at the IPO and sell at the deal, and you make a very nice low double-digit return, better than bonds. You can buy hedged equities when equities are really, really high. There are ETFs like HDGE that allow you to be long and short. So there are opportunities in every market to build a diversified portfolio, to integrate other assets into that portfolio. We love emerging markets, right? We think that's where the growth is, particularly places like China. But what about all the Cold War rhetoric about China? Ignore it. That's fear, uncertainty, and doubt. That's FUD created by governments, right, in this case, to try to slow the growth. See, China and the U.S. 10 years ago had to decide, what do I want to be the best at? And America chose, for better or for worse, to be great at social media. And we are amazing at Instagram and Facebook and all the things that we do, Twitter. We're awesome. Well, China decided to be great at AI and 5G. And so they've got a huge lead in the digital age because those technologies are core and integral. So we want to try to slow them down. And so you're going to hear lots of bad things about China. But the reality is you should own some China, particularly some local shares. People are worried about inflation right now. Inflation is happening because of what's called the base effect, right? We locked down the world a year ago, very ill-advised. We locked down the world in response to a virus. We've been dealing with viruses for 2,000 years. This one's no different than any other virus we've ever dealt with. But we locked down the world and we disrupted everything. And now prices look like they're rising. They are. Well, what happened? We printed a lot of money. In fact, get this stat. The government created 40% of all the dollars that have ever existed in the history of the Republic in the last 12 months. Wow. Unbelievable. That's why assets in commodities, in cryptocurrencies, hard money assets, gold, silver, precious metals, all of those assets are getting higher in price. It doesn't mean they're getting better. It means the dollar is being devalued. And so that's the thing you want to protect against, is that devaluation of the currency. And that's happening all around the world because governments are highly indebted. And a highly indebted government has four choices. They can pay the debt back, they can restructure it, they can default on it, or they can inflate it away. Well, they can't pay it back because even if you taxed everybody 100%, they couldn't pay back the debt. They can't restructure it because they all have their own debt problems, so they can't accept lower payments for the debt. They can't default on it because then the politicians get kicked out and they don't like that. So they're going to inflate it away. So inflation is going to continue to be a challenge, and the way to combat that is to own a portion of your portfolio in assets that hedge against that risk. So build a diversified portfolio, find an advisor like Josh that you trust and that you know will build that diversified portfolio that embraces companies of the future, ideas of the future, and you'll be in good shape.
So you like emerging markets, crypto, of course, hedged equity. What else? Anything else?
I really like SPACs, SPAC originated companies. I like the future, right? I like to invest in the future. So I want to own autonomous vehicles. I want to own electrification of vehicles. I want to own innovation as an asset class. I want to own cryptocurrency. I want to own online gaming. If you would have told me a year ago that the guy telling people how to bet on the Kentucky Derby would get more airtime than the actual horses, I would have laughed at you. If you would have told me a year ago that people would be on ESPN telling us how to bet the over-under, I would have laughed. But it's real. So companies like DraftKings are going to do really, really well for years to come because online gaming is part of it. If you would have told me that esports, that more kids, or actually more people, not just kids, more people will watch esports this year than every other league except the NFL, more than baseball, more than hockey, more than basketball, I would have laughed, but it's true. So esports, online gaming, electrification of vehicles. How about space tourism? How many space tourists do we have today? That would be zero. How many will we have in the future? More than zero. It won't be me, Josh, but somebody's going to go do that. And
and they'll pay a lot of money to do it.
Are going to be, pardon?
And they'll pay a lot of money to do it.
They'll pay a lot of money to do it. So look, investing in innovation is always a good idea. Investing in the future, always a good idea. Diversifying your portfolio, always a good idea. Hedging against the big risks, inflation and deflation, really important.
Are you worried about deflation at all?
Pardon?
Are you worried about deflation at all?
I am. I actually think this inflation scare will be temporal and that we're going to go right back to deflation. Deflation is basically excessive government spending causes deflation because government spending crowds out private investment. And we are going to go back to deflation after this base effect of the lockdown depression goes away. I think we'll be right back to deflation. I think things like long bonds will turn out to be a really nice investment later this year. But
so there's a traditional thing for you.
We're not going to Weimar Germany. It's a temporal or transitory thing, and that's one where the government's actually right on that.
And what do you do to combat that?
Well, in the short term, you want to own commodities. You want to own gold. You want to own cryptocurrencies as the monetary inflation happens. But over the time, the deflation, the way to protect yourself against that is with long duration treasuries. And those have been a great, and again, you don't need a lot. You need 1%, 2%, 3% in a portfolio to really hedge that particular risk. Look, technology is deflationary, QE is deflationary, and all of those things. Because look, we're in a place where every empire in the history of mankind has come, right? Where you get profligate spending at the government level, and eventually you have to devalue the currency so much that you have to hit reset. And the way to protect yourself against that is with high quality, long duration assets.
Wonderful. Well, thank you so much for joining us for this final segment. Mark Yusko, MorganCreekCap.com. Have fun at the Bitcoin conference. I'm sure it'll be fun.
All right, it's going to be crazy. So I look forward to getting together again, and we'll talk about the week in Miami.
Yes.
Right, take care, Josh.
Let's get together soon. Thanks. Mark Yusko, Morgan Creek Cap. And folks, we'll be taking your calls now, 800-321-0710. Very fun interview with Mark Yusko of Morgan Creek Cap.
The preceding program was sponsored by the Jelensky Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelensky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelensky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.